Welcome back to Squawk Box. I want to take a look at the markets right now. Joining us, Anastasia Amoroso, Chief Investment Strategist at iCapital. Good morning to you.
Good morning.
We've been watching sort of this uniquely strange situation where all of a sudden quantum computing in the context of NVIDIA and some of these other AI darlings, and then Bitcoin, risk off, risk on, or maybe risk off right now. What's happening?
Well, it's been a struggle, and it's been a tug of war to start the year. And, you know, it makes sense because, first of all, when you look at investor positioning, they're a bit of an impasse right now. You've had the same percentage of bulls versus bears, and I think it has to do with the fact that there's two factors that are battling it out right now. You know, on the one hand, you have this very positive story of artificial intelligence that's clearly carrying itself over into 2025. You have a story of very solid earnings that we're expecting for this quarter. But that has to be taken in the context of what we might get from the Fed and what we might get from the new Trump administration. And that is creating some volatility. So given that setup and given the fact that markets, frankly, have not de-risked enough just yet, that's what we have to go through, is we have to go through this battle. And I think it started...
De-risked is usually a euphemism for go down.
Yeah, that's right. That's right. And
So,
well, we've seen a little bit of that at the end of last year, and we've seen the markets pull back, 2 or 3%, but we've seen hedge funds, for example, reduce their positions, or rather add shorts.
Right.
We've seen systematic investors also go through a wave of selling. Maybe some private clients did that as well, but I don't think we've seen enough of it, and we're certainly not broadly at oversold levels. You know, maybe we have a share of, new one-month lows on the S&P that's, quite a bit higher than normal, but I don't think we've seen enough. So that's why I can say, this is the time to aggressively step in the market. I think we have to be patient for the month of January and have these factors battle it out. But on the days where you do have policy-induced uncertainty, I would say like yesterday, I think you look at things to buy. Maybe not quantum computing.
And so then the question is, what do you look to buy if you're waiting?
Well, the first big theme, of course, is artificial intelligence. As I mentioned, it is carrying itself over into 2025, and I think it's broadening. Last 2 years have been about semiconductors. I think this year has to be about AI software. It has to be about AI monetization, but it also has to be about AI power. And it's not just, a number of headlines talking about data centers and how much they consume, and the fact that I think you need 8 times the electricity to run an AI data center. It's an actual real trend, which I also think the Trump administration is going to support as well.
For the additional
additional investments in data centers. So I would look to AI software. I would look to AI power theme. Broadly, I would also look to alternatives. One of the things we talked about in our outlook is if you expect this to be the year of broader outcomes and higher volatility in the public markets, that's why you may want to have that piece in your portfolio that is private markets, where you have typically higher risk-adjusted returns, less volatility, more insulation.
Well, but the question is this the vintage, right? Or are markets, right? Are you going to look back?
Yeah.
If you're in the alts world, in the alternative world where you're playing private markets and you're playing them because the reason there's no volatility is because you don't get to see the volatility. That's really why.
You see the marks on a quarterly basis.
Sure, but the question is, 5, 6, 7 years from now, are you going to look back at this moment in time and say, wow, this was a great time to get in?
I think this is one of those years. 2021 was clearly not that year, because if you were stepping into private equity or venture capital, you're doing so at extremely high valuations. We don't have that anymore. We're not at the same rock bottom valuations we saw in 2022, 2023. We've picked up some, but if you look at private equity valuations, they're still trading below where the public market valuations are. So I think it is a decent point to step in. But for investors who have an allocation for private equity, or maybe they can buy, let's say, a secondary middle market buyout fund, what they can benefit from, Andrew, I think this pickup in capital market activity that we expect. M&A, IPOs, monetizations, exits. So I do expect solid returns for private equity.
Anastasia, thank you for coming in.
Thank you.
Appreciate it.